Good morning, traders. I'm Dan Pavlonis, Senior Market Strategist here at RJO Futures, here to talk about the currencies. Do this every Thursday, and if you've been following what I've been talking about, you're probably looking at a much stronger dollar and been trading a much stronger dollar and looking for a weakening euro, weakening eurozone. And we've also been talking about the potential of the ECB in implementing some type of quantitative easing. So today we had Mario Draghi, the ECB rate decision. The ECB, Draghi, cut the rate, or there's actually three different rates, by 10 basis points, or 10 BPS. And what that essentially does is bring the interest rate so low that it's essentially forcing savers out into the market and in different respects to create investment. That weakened the euro, but then also once Draghi started to speak, we still didn't, at that point we didn't get the ABS or the quantitative easing, what we were looking for. But once he started to talk, he spoke about this ABS plan, and the 2-year plan is, especially is what they're looking to do is implement ways and means to create asset-backed purchases, but also covered-backed purchases, anything from MBPS or MBS to real estate all the way to the other end of LTROs. So essentially what they were looking to do is get money out into the market, into the real economy. A little bit different than what we saw in the quantitative easing scenario here in the US, where the money basically went into the US markets and went into the banks, but never really had that trickle-down effect, which was expected. So things are happening here. The dollar's getting much stronger. The euro's getting much weaker. This is essentially what the Eurozone wants. Germany, countries of that nature, in respect to a stronger euro, have a stronger economy, but it's only helping a select few, and it's not really helping the rest of the Eurozone. So politically, there was a lot of pressure on the ECB, especially after the U.S.-Russian sanctions. That put a crunch on the economy also. So rolling over to the U.S., now our outlook is the end of QE in October, the possibility of interest rates going up, which I think is highly unlikely. And remember, interest rates going up doesn't necessarily mean that it's going to pressure the stock markets or anything of that nature. Never once have I seen interest rates go up and the stock market come down. It's usually the reverse effect, and it's usually interest rates going down to help boost the economy. So keep that in mind. Also, if you have any questions, feel free to give me a call. Dan Pavlonis, Senior Market Strategist here at RJO Futures. Futures and options on futures may involve substantial risk and may not be suitable for all investors.